QuickBooks Online 2025 Transaction List by Date Report. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody, looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. Choosing the United States version of the software, and then we will verify that we're not a robot just by checking that box off. That's all you've got to do for the verification. Let's close that prior tab. No longer needed. Sample company file, Craig's Design Landscaping Services. Going down to the reports on the left-hand side to open the major financial statement ones as done every time. We're in the Standards tab. The Favorites section, right-clicking on the balance sheet to open a link in a new tab, right-clicking on the profit and loss to open a link in a new tab. We will tab to the middle, close up the ham boogie like we do every time, and change the range, going from 010124 tab, 123125 tab, dropping it down for years. We want to refresh it by running it. And that gives us the 24 and 25 years, and they are side by side. We'll go to the next side, to the right side for the tab side, closing the hamburger, and then once again, 010124 tab, 123125 tab, selecting the drop down to see it in years, run it so we can refresh it, and that gives us the 2024 and 25 side by side. Remembering these major two financial statement reports, the balance sheet, the income statement, which you can call the profit and loss, sometimes referred to as the P&L, are the major financial statement reports. They're more than reports. Financial statements, that's what those are. And now we're looking at other reports typically giving us more information about one or multiple items of these major financial statement reports. Let's go to the tab to the left to explore more of them. We're still on the reports on the left-hand side. Let's close up the ham boogie for now. We're going all the way down to where we have For My Accountant reports. So these are ones that often have more detail in them and possibly debits and credits that accountants like to deal with, possibly. All right, so we're looking this time at the transaction detail reports. We've got the transaction detail by account, the transaction detail by date. Now, the transaction detail by account is going to give you similar information to the general ledger, which we saw in a prior presentation. Is basically like the transaction detail reports if you drill down on a particular account. But it gives you all of them in one place, right? So let's check this one. Let's right-click and open a link in a new tab. What I'm more concerned with as something different is the transaction list by date. So let's right-click on that one and open a link in a new tab. They look similar. Remember what the difference is. Transaction detail by account, transaction list by date. All right, let's go to the transaction detail by account. Let's close up the ham boogie. And let's see it for a custom date range going from 010124 tab 123125. And so then we have an information, like I say, looks much the same, very similar to the general ledger type of report where we have each of our accounts, the transaction detail in each of those accounts in a similar fashion as though we went to, say, the balance sheet account and just clicked on the cash. And we get our detailed report listed out by date within that account. Let's go back. The difference here being that we don't have just the checking account. We've got all of the accounts that are going to list out all of the information by account. So that's great, but not as useful these days because usually this is the type of report that you would give to an accountant or auditor if they want more detail about the financial statements you've given them. But these days you can give them access to the actual QuickBooks file themselves, in which case they're possibly going to drill down to get this information on the accounts as they have the balance sheet income statement open, or possibly the trial balance, which we'll talk about later. Let's look at the transaction list by date by contrast and then close up the ham boogie. And let's see the range. Let's do the date range, a custom range again. This time, let's just do 2024, 010124 tab, 123124 tab. All right, so now we have all of these detailed transactions, but it's not giving them by account, but simply by date, the date that we entered into the system. Now, recall that when we do the accounting process, we can think about the cycles within cycles within cycles, right? Meaning timing cycles. The years repeat. We go year by year and then quarter by quarter. You can think of it month by month, week by week, day by day. But you can also think about the accounting cycle as things that are similar in the same cycle, meaning revenue ultimately coming in is typically part of what we would call the customer cycle, revenue cycle, income cycle. Money that's actually going out is usually going to be for things that we paid for, which we might call the vendor cycle, the expenses cycle, the payable cycle, and then we have the employee cycle, and those are the general cycles that we can think about. And then the forms are within each of these cycles. So then when we drill down on the data, it's useful to be drilling down on the data by account, and most of the accounts lend themselves to particular cycles. Accounts receivable lends itself to being part of the customer cycle. Accounts payable lends itself to being part of the payable cycle. The cash is the weird one, the lifeblood that's in basically all of the cycles. But here what we're doing is, instead of looking at it by cycle, customer cycle, vendor cycle, we're looking at the date of when the transactions happened, which oftentimes is less useful for our normal accounting processes, but can be quite useful for certain things, such as possibly for billing. So if you wanted to say, I want to come up with a billing structure for my accounting system, which isn't based on hours, because hours are something that it's hard for people to kind of trust, and it could be the fact that you could use different hours for depending on the day, right? You had more coffee one day and you did it faster or something. I don't know. But if you can give something more concrete, that could be a better billing structure possibly. So how could you give something more concrete? Well, maybe you count the number of transactions you have entered. So if I enter the date range from, for the month of January, and I just count the number of transactions and I bill based on a range of transactions, if I have 20 to 30 transactions or 20 to 50 transactions or whatever, I bill so much. 50 to 100, I bill so much. 100 to 150, I bill so much. And then you have a more concrete demonstration of the work that's been done, because if they ask you about the transactions, you can show them the transaction list by date. So that's kind of a useful tool. However, some transactions are longer than others. So if you deal with payroll, you're going to have some transactions that count as, say, one transaction, but they're quite long. So you might say, well, that's not as efficient because I might be doing more complex tasks sometimes, in which case you might want to try to bill based on the number of accounts that are impacted, which you can't really get from this report as well. You might be able to do that, as we'll see in the future, with a journal report that'll help you to count these items. Now, just a quick note, how would you count them? You can say, hey, look at all these transactions. What am I going to go through here and just count every line? Well, no, what you can do is you can export it to Excel, right? We can export the report to Excel, and then within Excel, we can run a count function, which is just says equals count if there's a number in it, or just count. Right, count the columns, and that'll give us the number of columns. That's a very easy thing to do, and then we can possibly bill based on that. So that's one way that this could be a useful report. It's also nice because if you're trying to review somebody's work, for example, you have staff or something like that that's working on things, you can go into here and you can see what has been done by date of transaction. If you're grading things, obviously that's quite useful as well, to go in here and see the transactions. Also, if you want to see the detail and give me an idea of what is happening per transaction form, looking at all the transaction forms that are impacting the company file. In other words, this account or this report will give all the transaction detail reports. So instead of looking at one account, drilling down on that account to look at the forms, you can look at all the forms together, possibly getting a better sense of what those forms are doing. So in other words, you can deconstruct what is happening by looking at the forms and looking at how those forms impact the financial statements this way. So let's break this report out real quick. We've got the dates. We can sort by date here. We've got the transaction type, These, of course, are the forms that we entered into the system, which are in the plus button up top, similar to a transaction detail report. We've got the numbers. And by the way, if I sort by the transaction type, that's pretty useful as well, because now I have this nice sorting view of all the similar types of forms. That's useful. Let's go back to the date. And then we've got the number, which would be like a check number or form number. If there's a form number, posting if that's relevant. We've got the name, which would be the people we do business with. Typically, if money's going out, it's going to be the vendors, money's coming in. The customers, employees would be the employees for payroll checks. We've got the memos, if we added memos to any transaction. And then importantly, we have the account that's impacted. Now, note that every transaction has two accounts that are impacted at least. That's how the double entry accounting system works. So which account goes first? Well, that's kind of interesting because it depends on the form as what does the form think is the primary account. So in other words, if I look at these forms, what would be the primary account for invoice? You would think it might be accounts receivable, but the other side's going to go to revenue. So you would think any invoice, possibly you'd have the primary account be accounts receivable. Receive payment, cash is going up, but accounts receivable is going down. You've got the sales receipt has revenue and accounts receivable. You've got the expense form, checking account is going down. Checking account, check form, check account's going down. The bill form, that means accounts payable is going to go up. So you can kind of see what's the primary form or the primary account that QuickBooks sees is primary related to a form. So a deposit, primary account is the checking account. The bill form, primary account is the accounts payable. An invoice, primary account, accounts receivable. A payment, so they see that as a checking account form, increasing the checking account, even though the payment by definition is decreasing the accounts receivable account, but it's going to be kind of like a deposit is the way the system is seeing it. An invoice, accounts receivable. A check, the primary account, is in this case the MasterCard or the checking account. They paid it with a credit card in this case, and so on. A bill, the sales tax payment, they see it as a check type form. Checking account's the primary account. Now, what's the other account that's affected? The non-primary account is going to be over here in the account full name. So notice that what if there's more than two accounts affected? Well, then they're going to have a problem. It's going to give you like a dash or a split icon over here, and you're not going to get the information. That's where this report is limited. If there's more than two accounts affected, it's going to give you limited information. So a bill form, accounts payable, and then the other side went to an expense, legal and professional fees. Accounts receivable invoice, accounts receivable went up, but it doesn't give you the other side. Why? Because maybe it wasn't just revenue. Maybe it also had sales tax. Maybe it also had inventory, which deals with inventory going down and cost of goods sold. But many accounts are affected in that transaction, and therefore it can't just give you the other side, which sometimes it calls the split account. Bill payment, so the other side went here to the accounts payable. A payment checking account went up, the other side to accounts payable. Invoice expense, once again to the legal. Dang lawyers are taking all our money. Must be in California. This must be a California-based business. You pay the lawyers more than you pay your people for buying inventory around here. It's ridiculous. Dang lawyers. All right, I got off track there. So that's going to be the general idea. Now, this report also could be useful if you want to look at all the transactions. Notice, again, you can filter by transaction. You can sort by transaction, which is quite common. And then I can see the transactions. But I might also filter by transactions, noticing that I'm in the new mode. I'm not in the classic mode. You could switch to classic mode, which looks like this. We've got the different filtering option. Let's go back to the modern mode here. Back to the modern mode. Now I have to enter the dates back in. You messed it all up, going from 010124 to 123124. And then if I can filter, common filter options is to say we want to filter by transaction type. And then equal to is common. And then possibly we want to filter by, I don't know, expense form, for ejemplo. And so there we have it. It doesn't have any expense, cash expense. Let's try another form. Let's check that and go with a deposit type of form. All right, so there we have a deposit form. So that's that. And so let me unfilter this. Let's take away this filter. And so there we have, that's the only deposit form. We have a lot of bill forms. Let's look at a bill form. Transaction type, and let's make a bill form. And say we're going to sort by bill form. So there's the bill forms. So that's a common thing to sort by is the transaction type, but of course we have other filtering options here as well. So this is one of those reports. If you're trying to drill down on a particular transaction, you might go in here and look at the transaction type or by name or whatever other filtering capacity you have by either sorting the report by that item, name, or transaction type, or using the filter option.